Hey guys, good afternoon. It's Angelo Christian Financial. Thank you so much for watching our podcast, Real Estate Insider. It's where America goes for funding for the last 20 years. You can call or text the number above at 832-431-6331. Remember, we're a direct nationwide commercial residential lender. We also shoot our YouTube Real Estate Insider podcast to educate and empower people on credit and finance. And one of the things we're going to be talking about today is how to protect yourself when you actually go under contract. Very, very important thing if you're looking to purchase real estate property, that you have the right contingencies in place on your contract to be able to protect yourself so you don't lose money. All too often, we see so many people, whether they're sophisticated investors or first-time buyers, they go under contract to purchase property, and they're at risk of losing their earnest money or their capital because they didn't protect themselves in the right way when structuring the contract. So a really, really important thing is making sure that you have certain contingencies in place with respect to your financing, with respect to the property, the actual collateral. So you definitely want to have appraisal and financing contingencies in place to make sure whenever you go under contract that you actually don't lose any money. Because normally when you go under contract, let's say that you're buying a $500,000 home, you normally have to put up a 1% earnest money deposit with the seller that holds that at the title company. So you have to put $5,000 down to take this property off the market. Now, the thing you have to be careful of is when you sign that contract, if you don't have certain protections in place, safeguards, you're at risk of losing your money. And that's not a good thing. So the first thing you want to make sure is that you have a financing contingency in place. You got to check with your lender to see whether you need 15 days, 21 days, 30 days, 60 days to get your financing approved. If you don't have that written into the contract, the seller can keep your money if the lender denies your loan. So very, very important thing to make sure that you have a financing contingency in place, and you also have an appraisal and an inspection contingency in place. Let's say that you buy the property and the property turns out it needs a lot of repairs and a lot of rehab that the seller didn't disclose to you. Well, then you didn't put that in the contract, that you had an inspection contingency, the seller can keep your earnest money. Also an appraisal contingency. Let's say that the property that you bought for $500,000 only appraises for $450,000. If you don't have an appraisal contingency, the seller can keep your earnest money because the property should appraise for at least whatever you're paying for it or greater. It shouldn't appraise for less. And right now in a seller's market, agents are requiring a lot of people to waive their contingencies, which I don't agree with. I think you need to have your appraisal and your financing contingency in place to protect you so you don't lose your earnest money. So remember, because that's what's really the main thing, you got to protect yourself when you're out there in the market purchasing a property, and you want to make sure that your hard-earned money is not at risk of being lost because you didn't make sure you had the proper safeguards. And sometimes some realtors, if they're new, they're not checking these things. A lot of realtors do check these things, but just make sure that you have your appraisal contingency, your financing contingency, your inspection contingency. In the event that anything happens, you can get your earnest money back. You shouldn't lose your earnest money if one of those things busts out. So what we try to do is educate and empower people so they can get the best deal that they can. And so I thought it was an important thing because right now it's a very hot seller's market, and inventory is flying off the shelves, and I'm seeing all these contingencies being waived right now, and I think that's too dangerous. I think it's too scary. So make sure that you have these contingencies in place to protect you in the event that you're trying to. It doesn't matter if it's a commercial property or residential property. You got to protect yourself and look out for yourself. So I appreciate you guys watching our show. If you like the channel, please give us a big thumbs up. Share this with anyone that you know that's looking to get financing. And please call or text us at the number above at 832-431-6331. Thank you so much for watching Angelo Christian, and check out my next video of it. Bye-bye.